Hello, and welcome to Making the Rounds, a podcast by the American Medical Association featuring advice, interviews, and discussions on the most important topics impacting residents' lives and careers. In this episode, anesthesia fellow Chirag Shah, MD, and Laurel Road's Alex Macielak dig into how to find loans that offer the best repayment option and utilize your debt more efficiently. This episode of Making the Rounds is one in a 4-part series on student loans, student debt, and refinancing. As a disclaimer, every situation is unique, and it's important to do your own research before making financial decisions. Here's Chirag and Alex.
When I was refinancing my loans, I used to get a bunch of things in the, my mailbox, Laurel Road, SoFi, all these other, Bank of America. They would all have offers for me. How do I kind of pick and decipher between which lender is best? What kind of things should I be looking at? What parameters are the most important? Obviously, interest rate is a big one.
Sure.
But are there other differences and nuances that we should be picking up on?
There are. I mean, you hit the nail on the head. The interest rate, it's the factor that people go into this most interested in, right? You want to get your rate as low as possible. But there are other factors, certainly. It's, those kind of ancillary benefits that I've mentioned throughout the podcast, like, the loan being forgiven in the event of death or disability, 12 months of forbearance available. We at Laurel Road offer a quarter-point rate discount for making automatic payments, another nice benefit. And certainly our affiliation with the AMA, we give all American Medical Association members an extra quarter of a point off of their interest rate. So, if you were to come to us off the street and you weren't an AMA member and we, maybe offered you a 5% rate, by virtue of that AMA affiliation, your rate would be a quarter point lower, so 4.75. And so things like that are certainly a factor. I think, actual structure of the lending institution that you're talking to.
So what do you mean by structure of the lending institution?
Yeah, so the student loan refinancing marketplace again is sort of unique in that there's a mix of type of businesses that give these loans. Some online lenders that go to venture capitalists or banks to get lines of credit to then lend to people. We at Laurel Road, conversely, are the actual bank ourselves. So we're an FDIC insured lending institution, and with that comes, in all likelihood, a greater level of borrower information security, compliance, some benefits associated with being a bank. And going back to the rate, as a bank, we have our own balance sheet to lend off of, inherently lower cost of capital, which allows us in many cases to provide, borrowers' best interest rates. So I guess in short, a number of factors to look at. So it's something certainly, worth doing some research on as you make a decision.
And then we touched on the forbearance and the economic hardship exceptions. Do most lenders offer that? Is obviously the federal government does and Laurel Road does, but are you guys the exception to the norm, or is that pretty widely spread out amongst the lenders?
It's a mix. Most of the reputable ones do offer those similar types of protections. Some smaller lenders may not, but by and large, most of the large refinancing players are, offering a quarter point rate discount for making automatic payments, or offering up to 12 months of forbearance. Those have become kind of industry standard.
So how do I know if someone is reputable? Like, yes, I know that the AMA relationship can signify, you have the trust of the AMA, but what are some other factors I should be looking at?
It's a good question. And I think, at the root of it is what is reputable? What do you define as reputable? So certainly, doing a Google search of each company is well worthwhile. How have their executives behaved? How have what type of charitable efforts have they made? Those might be things that you want to look at. But it depends on what is your priority. Some folks care about those, others less so.
And then if I wanted to refinance my loan, so if I have $200,000 and I want to refinance, but let's say I want to refinance for more. Is that a possibility if I have a wedding to pay for, if I want a new car, what have you?
It's a good question, like a cash out refi,
Right.
almost. It's not a possibility with our program, at least, and I don't believe any other lenders allow you to take additional funds on top of what you currently owe on student loans. But what you can do is take a supplemental personal loan on that.
Is the interest rate higher on that than it would be on a educational loan, essentially?
A bit, but still very low relative to not only the credit card marketplace, which in a lot of cases is the alternative, but also kind of standard personal loan offerings from other lenders.
So it definitely makes sense to take out a loan like that if you have a lot of credit card debt, and you can essentially lower your effective interest rate. That would be how I would utilize it. It sounds like it's a great option for that.
It's the most common usage. People who've racked up credit card debt for whatever reason, moving to residency, moving to go practice, maybe getting married. You can take a personal loan, pay off the credit card debt, and now you're paying back this fixed rate personal loan, at a defined schedule rather than having a large credit card balance, which might be at, like you said, 10 to 15 to 20%. So a good deal of interest savings. Also helps your credit profile by doing that. So again, the credit bureaus don't like to see a high revolving debt credit utilization level, which tends to be the case if you have a lot of outstanding credit card debt. So by removing that and moving it to a fixed term loan, which this personal loan would be, you're actually going to improve your credit score as well.
Great.
So a number of benefits, and I think it's particularly pertinent both to people. We have a dedicated program for residents or residency interviews, I should say. So in your fourth year of school, you got to fly around the country to interview.
Right.
Rather than put all that on a credit card, take one of these loans, lower rates, and a defined payment schedule.
Right. I definitely know that can get very expensive. I myself interviewed at 20 places.
Wow.
So it definitely adds up. So just in order to summarize kind of what we've discussed today, don't be stressed about your student loans. You're going to make enough money to repay them. When you're thinking about refinancing, kind of have an idea of whether you want to go for the public service loan forgiveness versus a lower rate by refinancing through a private entity. The earlier you know, the better off you'll be because you'll save a little bit more money.
Yep.
And then credit card debt is obviously the worst type of debt, so be very cognizant of not accruing that. And be cognizant of the impact that has on your credit score, because the refinancing rates you're going to get are going to be built on that FICO score. So try and optimize that as much as possible. We mentioned a bunch of factors that go into optimizing it, including length of credit history, usage of your revolving credit limits, payments on time, and a few other smaller factors, I guess, that
Yep.
would go into it as well. What are some other highlights for the residents and professionals to take away?
Yeah, I think if there's one high level takeaway here, it's that there are opportunities available to utilize debt efficiently and economically. Be that through using the federal repayment programs to capture some interest subsidy or get your loans forgiven, or through refinancing, and locking in a lower interest rate. There's opportunities out there, certainly for medical professionals. You guys tend to have very, very low unemployment rates and therefore very low default rates on debt, and that makes you some of the best borrowing candidates in the marketplace, and in a lot of cases, as you saw by refinancing, eligible for some very, very low interest rates. So it's certainly not a one-size-fits-all approach. I mean, everybody listening to this should be looking at their individual situation and not, just taking blanket advice from a colleague. Certainly people have different financial goals, and you treat your debt accordingly. So do your individual research, take advantage of our student loan assessment tool for that piece of the pie. And figure out what's best for your given situation and your optimal goals.
Yeah, and I think the last thing I would say is make sure that you pay attention to this, because these things can snowball. Kind of have an idea about what your financial goals should be. As medical professionals, we spend a lot of time in residency, studying, thinking about patient care. And all that's really important, but if you can spend about an hour or two on this aspect of your personal life, it'll probably help you down the road as well.
Definitely.
All right, Alex, thanks so much for taking the time. It was a very thorough discussion. Really appreciate all the advice you gave us.
Thanks, Chirag. It was a pleasure being here and a pleasure meeting you as well.
That was Dr. Chirag Shah and Alex Macielak on efficient repayment and debt utilization. Be sure to tune in for other episodes in this 4-part series about student loan, student debt, and refinancing. For more information on how to manage student loans, visit www.ama-assn.org/refinance loans. You can also subscribe to Making the Rounds and other great AMA podcasts on iTunes and Google Play, or visit ama-assn.org/podcasts. Thanks for listening.